Welcome back to the terminal for your widescreen daily market update for August 13th, 2026. You are locked into today's explainer, where we are stripping away the noise and delivering a high-signal, zero-fluff breakdown of the day's market action. The tape is telling a very specific story today, and frankly, if you aren't paying attention to the undercurrents, you are flying completely blind. So let's pull up the data and make sense of what just happened.
All right, let's dive right into this. The absolute biggest quirk of the session right off the bat was a highly divergent tape. We just didn't get a unified market direction today. Instead, the Nifty slipped into the red, dragged down by some pretty notable weakness in the metals and IT sectors, and that marks its third consecutive down day. But on the flip side, the Sensex actually bucked the broader trend entirely and managed to finish in the green, propped up by some serious heavyweight support.
Looking specifically at the Nifty 50, we closed the session at exactly 24,396. That is a drop of 40 points on the day. The market breadth here was decidedly cautious. Now, it wasn't a panic sell-off by any means, but rather this slow, methodical bleed, as traders just opted to take risk off the table in the cyclical space.
Meanwhile, the Sensex defied the gravity of all that broader market caution. It closed up 114 points at exactly 78,080. When you see this kind of massive split between the two major benchmarks, it tells you for sure that passive flows and concentrated heavyweight buying are masking some of the weakness simmering just beneath the surface.
Moving on to Section 1, Macro Catalysts, a tale of two inflations. So check out this massive global divergence we're seeing in the inflation data right now. On one side of the globe, the U.S. July CPI printed incredibly soft at just plus 0.1% month over month. That cool print has markets now pricing in roughly 85% odds of a 25 basis point Fed rate cut in September. That is generally a huge tailwind for emerging market risk and the rupee. But back home, well, India's retail inflation for July stubbornly climbed to a 19-month high of 4.45%. While it's technically still within the acceptable band, this upward creep completely tempers any near-term hopes for a rate cut from the RBI. It is a total tug-of-war for local equities.
Next up, Section 2, Corporate Buzz and Mega Deals. Big money moves the tape.
Now this is the number absolutely everyone on the street is talking about today, $1.9 billion. Bank of America has signed a definitive agreement to invest roughly $1.9 billion for up to a 49.9% stake in Geo Financial's NBFC arm, Geo Credit. Guys, this is a massive marquee validation of Geo Financial's lending buildout. When institutional giants like B of A write a check that large, it fundamentally shifts the long-term thesis for the stock. And honestly, this brilliantly illustrates the rotation of passive flows that we all need to be prepping for. The MSCI August review changes were just announced, and these take effect on September 1st, which means the actual rebalance executes on August 31st. Laris Labs is the single biggest beneficiary here, looking at an estimated 4,940 crore rupee passive inflow. Huge. We also saw additions for Adani Energy Solutions, Grow, and Lenscard. On the chopping block? Well, ASTRAL and SBI cards are both getting dropped to the small cap index, with ASTRAL facing a projected $138 million outflow.
All right, Section 3, F&O movers. High drama in the derivatives market.
Take a look at the extreme volatility at play here today to see who actually made money. ASTRAL absolutely crushed it, closing up 8.7% as the top gainer. Solar Industries was right behind it, up 8.5%. But on the painful side of the ledger, National Aluminum and Page Industries both took a 4.6% haircut. Let's drill down into the specific catalysts behind these massive swings. Let's start with ASTRAL. Now remember what we literally just talked about a second ago? ASTRAL is getting dropped from the MSCI Standard Index, facing a $138 million outflow. By all conventional market logic, the stock should have been under serious pressure today. Instead, it jumped 8.7%. Why? Because the fundamentals drowned out the passive outflow noise entirely. They posted stellar Q1 revenue, up 15.9%, announced a 60% acquisition of DSS, and caught massive dual upgrades from JP Morgan and Nuvama. The street bought the earnings beat and completely ignored the index rebalance. Then you've got Solar Industries, surging 8.5% in an otherwise really soft tape. They reported a massive, record-breaking Q1 profit after tax, up 93% to 653 crores. This incredible beat was fueled by lucrative fresh defense and mining contracts. When a company posts numbers like this, with a crystal clear line of sight on a 14,000 core revenue target by FY27, the market honestly has no choice but to re-rate it immediately.
But, it definitely wasn't all green screens today. National Aluminum was the top F&O loser, dropping 4.6%. This was a direct result of capital aggressively rotating out of cyclicals as global base metals cooled off. Joining them right at the bottom was Page Industries, also slipping 4.6%. They were hit hard by a soft Q1 print where profit after tax fell 4% and margins compressed. And that weakness completely overshadowed the 200 rupee interim dividend they tried to sweeten the pot with.
Let's wrap up with Section 4, Forward Intelligence, the scuttlebutt and the look ahead.
So here is what the institutional desks are actually whispering about today. First, on Geofinancial. With that Bank of America JV ink now dry, chatter is picking up that this front runs a much faster lending ramp up in the market previously modeled. There's a medium probability this triggers a serious re-rating of their NBFC value. Secondly, you've got to keep an eye on Adani Ports. With Adani Energy getting added to the MSCI, there is a legitimate buzz of a broader group sentiment tailwind. If you are short Adani Ports right now, you are facing a very real squeeze risk heading into the end of the month. Let's map out how this all builds across the calendar over the next few sessions. Tomorrow, August 14th, brings the very last of the Q1 earnings prints, so keep an eye on ASHOKLEY and VOLTAS. Then, the markets are closed on Saturday the 15th for Independence Day. Next Tuesday, August 18th, is a really critical one. We have both the Nifty and the Sensex weekly expiry. Remember, Sensex now runs its own Tuesday expiry right alongside Nifty, so max pain levels absolutely matter for both now. Looking further out, August 25th is the Bank Nifty monthly expiry, and August 31st is when that massive MSCI rebalance actually executes.
So, what is the actionable idea for tomorrow? We're looking at Hindalco on the long side. Despite a generally soft tape for metals today, Hindalco is really establishing itself as a relative outperformer. They're benefiting from incredibly firm aluminum and LME spreads, and those realizations are only being aided further by a weaker rupee. Just make sure to keep your risk management tight here. The primary threat to this trade is a sudden rollover in China demand. And there you have it, folks. You really don't need to spend your evenings endlessly scrolling financial websites or suffering through those totally boring, repetitive news channels. Hit subscribe, click the bell icon, and just tune into this daily explainer right here at the closing bell. It is literally the only terminal recap you actually need. But I'll leave you with this one thought to chew on. With the Fed preparing to pivot and local inflation creeping back up, are we on the verge of the most violent emerging market rotation of the year? Think about it. As always, this is personal research for educational purposes only, not investment advice. Do your own homework before you execute a trade. I will see you back here tomorrow.